Economic events such as a country's interest rate decisions and their unemployment rate are important factors that impact currency and indice price changes. These economic events are announced by countries throughout the year and are easy to track using Trading Central's economic analysis tools. More than just a standard calendar, we shed light on the impact of macroeconomic indicators and how these insights can be used to better predict future price movements. In this tutorial, we'll explore the various features here to help you monitor and act on market-moving events. To get started, navigate to the Filters column on the left, where you can screen for events in the specific countries or regions of interest. Then, refine your list by selecting from the various event type and importance level filters. Low importance events carry the smallest significance on price, while high importance events are those closely linked to historical price movement, such as the unemployment or inflation rate announcements. Many traders choose to focus on the economic events only, with medium to high importance set. Use the tabs at the top of the calendar to adjust to the time frame relevant to your trading. We can specify by day, week, month, or even a custom range. The default is the recent or next, which lets you easily track events that have just occurred or are about to occur. Let's look at the US economic events happening recently. Current and upcoming economic events are listed in chronological order and updated in real time. We automatically detect your local time zone, but you can always change this at the top. Updated in real time for each economic event, you will see event time, the country the event has occurred in, the event name, the importance level, and actual, forecasted, and previous values. Click on any event to learn what this event entails and view the forecasted values. Select the event chart to dig into the details on the actual and forecast values that have occurred on previous instances of this event. Here we're looking at the event chart for the unemployment rate in the United States. We can see the forecasted unemployment rates in yellow compared to what was announced as the actual rates in purple. A country's unemployment rate is measured as a percentage, shown along the y-axis. Hover over the bar to view the forecasted and actual rates in the top left. In November, the forecast value for the US's unemployment rate was 3.5%, but the actual unemployment rate that was announced was 3.7%. In September, the forecast value was also 3.5%, and the actual value was 3.7%. Adjust the time frame by moving the blue bar at the bottom of the chart. The graph across the bottom of the chart shows the entire history of the actual results of the event. Switch to the price chart to see price performance around previous events and explore their potential relationship with the interactive charts. The chart will default to a frequently used FX pair, but you can adjust to a pair of your choice with the drop-down. A corresponding price can be seen beside it. The standard view is a candlestick chart, but click the gear icon if you prefer to use a price bar, line, or mountain chart. We've overlain the economic events onto this chart as gray diamonds. Click on any of the events along the right side or hover over the gray diamond to see the forecasted and actual value of that event. Once you've determined which events are relevant to you and your trading, you can add these to your calendar of choice for simple reminders. Let's select the Volatility tab to view the historical trend of an FX pair for a chosen observation period following the economic event. As a trader, I'm interested in seeing whether the pound and the US dollar was bullish or bearish 15 minutes after the United States unemployment rate was announced. Now I can see which months the price range was bullish or bearish after the rate was announced, with a summary along the right. I also have the option to filter for events where the actual was above, below, or match the forecast. Let's compare this 15-minute observation period to an observation period of 5 minutes. 15 minutes after the event, the pound dollar was bearish 83% of the time, versus 5 minutes after the event, when the price was bearish 67% of the time. This is good insight when planning my trade decisions around this pair. You're likely wondering what this bar chart is showing. Here, we're looking at the historical volatility of an FX pair in a given time frame, measured by true range. The true range indicates the degree of price volatility for a given FX pair, in this case, the US dollar and the British pound. We convert this number into pips, short for price interest points, because this is the most common unit of measurement used by FX traders to understand the volatility of an FX pair. Using pips, the trader has a better understanding of the magnitude and volatility from an event. The higher the number, the more volatile it is. We've highlighted the average volatility here with the blue line. In the Prepare Trade dropdown, you can easily plan your trade levels. This is the current British pound to US dollar price. Then choose your direction to buy or sell, along with a risk and reward ratio. We use the average true range from past events to calculate the corresponding take profit and stop loss levels. The risk-reward ratio, most commonly used in FX trading, is 1 to 2, so I'm going to leave this as is. Now I'm ready to copy the levels over to my brokerage order page and place my trade. Now let's look at the Impact tab. Here we can view key statistics of an FX pair's historical trend within a chosen observation period after the last time the economic event occurred. In this case, I'm looking at a chart for the Great British Pound to US dollar 4 hours after the United States announced their unemployment rate. The blue shaded area shows the 4-hour period after the event occurred. We can easily see what happened to the price in the 15-minute price chart during this time. The gray diamond is the economic event, where we can see the actual and forecasted values for the rate right along the right. Looking at the price chart, we can see in this 4-hour time frame that the pound US dollar price moved a range of 165.3 pips, ending with a bullish trend of 14.3 pips. Interesting. I'd like to come back to this economic event in the future. So let's go back to the main calendar page and add the event to my personal Gmail calendar. Economic Insight gives me the research I need to easily monitor, anticipate, and act on market-moving events.